Today, we will focus on how to dissect price action and how to join the parties with the dominant side. Trading rallies or crashes could be one of the best ways to trade for the most traders. It is all about dedication and hard work. If you're ready, let's start. So with the new year starting, I'm expecting a much better price action after that really horrible December we just went through. What I want to do is here to teach you why you should not get stuck on a single bias and why you need to adapt market conditions in a dynamic way. Generally, when a market crashes badly or stays in a strong downtrend, we need to follow the flow because that is usually the best overall approach. And using multi-imbalance areas with SR Phillips is a great idea because price love to flow towards open liquidity areas. So, as an experienced trader, this should be your logical and expected move, which is downwards. So, as an experienced trader, this should be your logical and expected move, which is downwards toward the open liquidity points. However, this is exactly why I always talk about combining imbalances, liquidity, and the structure together, because that is the best idea for trading. If the inner upper trend is not broken and keeps going upwards, it means price is still looking for another set of liquidity above. So you cannot just blindly short every short setup if you do not get enough confirmations in these markets. And the easiest confirmation to watch would be the lower time frame structure. Keep a really good eye on the lower time frame structure before taking any kind of trades. In Bitcoin, we had a really good example of this recently. There was a significant multi-imbalance area with a clear SR Phillips location. Logically, I was thinking, can we move lower from here and push towards the significant liquidity point? But that actually never happened because the lower structure, as you can see here, was never broken at all. If I had seen strong breaks downwards followed by a couple of structure breaks, this could have been a great short opportunity. But instead, if you carefully look above, you will notice the relative equal highs sitting up there. That was a strong reason for the price keep moving higher to take out that liquidity. And the inner structure was never broken and just keep pushing upwards. Because of that, we need to shift our thinking and realize we are going higher, not downwards. This is how you dynamically change your bias in the markets. You need to combine nearby liquidity levels with how the inner structure is moving towards those liquidity points. As you can see, you cannot trade what you think. You need to trade what you actually see on the charts. Okay folks, this is the end of a very educational video. Please take care of yourself and see you next time. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.